For all our comprehensive clients, we have filed almost 350 tax returns this year and observed a lot of mistakes that people are doing in their ITRs. Today, we are going to talk about all those mistakes and how you can avoid them. Hey everyone, my name is Niraj and I talk about personal finance and credit cards on this channel. I am a partner at Holistic Prime Wealth, wherein we help people like you manage their investments, take care of their insurances, focus on credit cards, plan their taxes, file their taxes, and a lot more. So if you're interested, please do reach out. Folks, taxation is one of the most important aspects of your personal finance and it can make or break your finances. So today we are going to talk about such important items that people generally, don't consider and don't take it seriously when planning their taxes. So the first important item is, selecting the best tax regime, guys. It is very simple. When you are filing your tax declaration with your employer, you have to select which tax regime you want to be in. Most times we have observed that people who have to be in the new tax regime end up selecting the old tax regime and vice versa. What happens in this case is your employer ends up deducting more tax and you will have to wait for a refund after the end of the year when you file your taxes. So this way your in-hand salary is lower than usual. So try to use the calculators available online, or let me know in the comment section if you want a calculator from me. I can share it with you and you can use it for your FY26 tax planning. The second most important mistake that people end up doing is keeping a big chunk of money in their bank account and in fixed deposits. So what happens, guys, if you are in the highest tax bracket, say you are in the 30% tax bracket, and if you keep money in savings account which is earning 3% return, or if you keep money in a fixed deposit which is earning 7% return, do you know how much tax you have to pay on that? 30% tax. So 3% pay 30% is 2%. So the post-tax return on your savings bank account is only 2% and it's 5% on your fixed deposit returns. But if you are a little bit smart and move the money to mutual funds, your taxation will only trigger when you sell the mutual fund. So if you don't have to sell the mutual fund in the next 5 years, you don't have to pay any tax. And then you are a little bit smarter. You use something called an arbitrage fund to park your short-term money. Your effective tax rate will only be 12.5% if you hold it for more than 1 year. And if you are holding it for less than 1 year, then still the effective tax rate is 20% compared to 30% what you are paying. So be a little bit smart and do these things. And we try to do this for all our clients, wherein we try to move the money to mutual funds so that they can save money on their taxes and earn better returns. The third mistake that people do is that they do not pay advance tax. So you may have capital gains income, you may have rental income, you may have this interest income because you're keeping money in bank and FDs. Guys, you have to pay advance tax. You cannot wait till filing of your return to make these tax payments, because if you wait till filing of your return, then you have to pay interest under section 34(2)(b) and under section 34(2)(c), and this interest is generally 20 to 25% of the total tax liability. So it becomes very, very important that you calculate these advance taxes and pay them on time. So there are 4 advance tax payments timelines during the year, right? So you can pay in June or in September or in December or in March, right? So I'll share the due dates also on the screen. The fourth and probably one of the most important mistakes that I've seen people make is that they do not disclose their previous employer income to the new employer. Say during the middle of the year you have changed your jobs, right? In September you moved from one employer to another employer. You have to make a tax declaration to that employer, and the time of joining you have to tell them that how much money did you earn from April till September from the previous employer. If you don't do that, they will not consider that income and calculate your income tax from fresh. What happens is, then when you don't consider income from the first employer, then your effective tax rate is lower because the new employer has considered income from zero. So with this in mind, you will end up with a very big tax bill when you are filing your returns, and this is a very common mistake that we have observed. A lot of clients have to pay more than 1 lakh rupees in taxes because of this one small mistake, right? So do not make this mistake and try to avoid this. Always remember, when you are joining your new employer, try to disclose the previous employer's income. The fifth item on the list is say you are somebody who likes to do intraday trading. Okay, I am sure most of you are doing it out there. If you are doing it, comment and tell me yes, I am doing it, and tell me which platform are you using. Are you using Zerodha, Dhan, ICICI, or something else? Let me know. So guys, if you are engaging in intraday trading, right, you're buying stocks in the morning and selling it in the evening. So what happens is you cannot, call the gains from this intraday trading as a capital gain. This is a purely speculative income. Okay, and you have to pay tax at the marginal tax rate only. So the disclosure has to be right. It cannot fall under the head income from capital gains. It has to be falling under the head income from other sources only. So be aware about it when you are filing your tax returns. The sixth item that is commonly observed is non-deduction of TDS on rent. So if you are claiming HRA and if your rental expense is more than 50,000 rupees per month, you are liable to deduct TDS of 2% when you are making these rent payments. I have seen many people get notices because they are claiming high HRAs and not deducting any TDS. So make sure that you are depositing the TDS on time every month or once a year for the entire 12 months, but you have to deduct TDS at the rate of 2% on the rent paid if the rent is more than 50,000 rupees per month. Another common mistake that is observed is people are transferring points from their own income to their spouse who is not earning, or something called an Hindu undivided family account, and putting that money in fixed deposits. Guys, this is wrong. This is going to get you tax notice at some point in time. Just because you have transferred the money to your spouse or to your HUF does not mean that it has become their money. Clubbing of income rules will apply, and whatever income you are earning on that money, you have to pay tax from your own pocket and not pay tax at the tax rate applicable to that person. So simply put, let's take an example. Say you have transferred 10 lakh rupees to your spouse and made an FD there. Spouse is in zero tax bracket, right? So 70,000 rupees income will become tax free for her. But technically, as per the income tax regulations, the 70,000 income has to be clubbed in your accounts and you have to pay tax at 30%. So be mindful of this. Don't do these mistakes of transferring money to your spouse or to your HUF. I did a very detailed video on HUF. Take a look at that. I'm sharing the link here. False declarations in the income tax returns and with employer. Guys, employer declarations cannot be false. Try to only do what is genuine, right? Don't claim unnecessary HRA or don't claim any sort of unnecessary insurance bills. What's going to happen is once your employer finds out, they may fire you. I have seen people getting fired in bulk in a lot of big organizations. So don't do that mistake. Same is with at the time of filing your income tax returns, don't make unnecessary claims, because income tax department has become very smart and they've started asking questions. Recently somebody I know got a notice for sharing their health insurance policies because they made a claim in their ITR, right? So do not make these mistakes. Claim only what is genuine. Next mistake what people do is they don't try to save taxes. Every year up to 1.25 lakh rupees of long-term capital gains is tax exempt. So if you are smart enough when investing in equity mutual funds or stocks, try to use this strategy and try to do tax gain harvesting and tax loss harvesting so that you can save taxes on this. Let me know in the comment section if you want me to do a detailed video on tax gain harvesting and tax loss harvesting. We can do it for you. Next is people have foreign assets. Now people have gotten carried away and opened a lot of foreign accounts, and the problem is that you have to disclose any foreign assets in your income tax return. If you're not disclosing, there is a heavy penalty. I'm sharing the details of the penalty on the screen, but you have to be mindful when you are filing your returns. Make sure that you comply with these regulations and disclose the foreign asset holdings that you have. Lastly, guys, timely filing of income tax returns is also very, very important. Most of you don't file the income tax returns on time. If you are filing your income tax returns after the deadline, you have to pay 5,000 rupees in penalty. That's number one. Number two is that if you have any losses, right? Say you've had losses in the stocks that you bought or in mutual funds that you sold, those losses cannot be carried forward. So make sure that you file your income tax returns on time. Becomes very important. That's what we try to do for all our clients. We try to file it before the due date, which is 15 September for this year. So folks, thank you for watching. Let me know in the comment section if you have any questions. Happy to take those, and we'll do more videos on taxation if you like these. Thank you.